Now we are moving on to the next session, and the title is exchange traded structure in gold complementary to OTC gold trading? Once again, is exchange traded structure in gold complementary to OTC gold trading? The moderator for this session is Ms. Rhona O'Connell, Head of Market Analysis, EMEA and Asia Region, INTL FCStone. And the panelists that we have that will be joining us is, first and foremost, Wang Zhenying, President of SGE. Secondly, we have, thank you for applauding, thank you. Second, we have David Mears, and he is the VP Precious Metals, LME London. And then we have Dennis Zhang, MD, Head of Commodities Development, Market Development, Hong Kong Exchanges and Clearing Limited. And also Sachin Patel, Senior Director, CME Singapore. And once again, ladies and gentlemen, the questions, as mentioned by Albert, will be taken by slido.com. So please go online on your phone, slido.com, and input the code APPMC 2019. Post your questions there, and our moderator will be able to access those questions. All right? So as our panel settles, I'll hand the next 1 hour to our moderator, Ms. Rhona O'Connell, whom you're already familiar with. So ladies and gentlemen, let's give a big hand to our panel, please.
Good afternoon, ladies and gentlemen. We'll try not to keep you too long from your lunch. This panel is concerned with the complementary nature of the over-the-counter market and the different exchanges around the world. Certainly, I would say 3 to 4 years ago, when exchanges, particularly with respect to gold, seemed to be proliferating around the world, there was a degree of concern and certainly many conversations about whether this meant that the market's liquidity was going to become fragmented. It would seem that that has not happened, but certainly with the panelists that we have on the table here today, in front of you here today, I would say that we've got the 4 largest and most influential bodies represented. So that said, I would like to hand over to Mr. Wang, who is President of the Shanghai Gold Exchange, for the first address of this session.
女士们、先生们，大家上午好！非常高兴有这样的机会受邀来参加新加坡贵金属峰会研讨会。我仅代表上海黄金交易所个人对这一次峰会的成功的召开表示祝贺。这一次研讨会的主题是场内和场外协同发展。那么我认为这个主题选择的非常好，它只抓住了黄金市场发展的一个关键。我下边的几分钟大概给我8分钟的时间，以8分钟的时间呢，以中国黄金市场以及 SGE 发展的经历，来分享我对场内和场外协同发展的一些思考。我首先介绍一下中国黄金市场发展的历程。中国黄金市场实际上是从2002年才开始的，开始的很晚。在2002年以前，中国的黄金市场实际上是计划经济，没有现在典型意义的市场，有人民银行，就是中央银行来直接管理。所有用金或产金的企业需要卖给人民银行，用金的企业需要向人民银行申请，这样的一个，因此严格意义上来说还不称为黄金市场。那时间每年中国的黄金，比如说进库或卖出，大概是在几百公斤那样子，不会到1吨的水平，是非常低的，因为当时的时间珠宝的需求量很小，而工业刚刚起步，这里边用金也很少。自从2002年黄金交易所成立以来，那么中国的黄金市场才真正开始起步。那么到今天2019年，也就是17年不到的时间。在这过去的17年当中，我们分成3个阶段。第一个阶段是2002年到2010年 这个阶段呢，是中国的黄金市场主要是以场内发展为主，场内解决的主要是产金企业和用金企业，他们之间直接的交易，不再通过人民银行来实现这种市场。那么这一段时间的发展，当然的时间呢，伴随着中国的经济的快速的发展，这一种产金和用金的实际需求依然很大，经历了一个快速的发展。到了10年以后，中国的黄金市场经历了一个非常另外一个阶段，这个阶段就是场内的市场和场外市场同时开始发展了。那么黄金交易所在场内竞价的同时，也开办了银行的询价业务。那么这一时候的发展，就是场内和场外同时开始起步。那么这个阶段随后的时间，那么随后有一段时间，就是最近这几年，又进入到第3个阶段，商业银行的柜台业务大量的发展。那么因此到今天，经过17年的发展，中国的黄金市场目前已经形成一个三个市场相关联的这样的一个构成。第一是场内市场，场内市场呢主要是以黄金交易所和上海期货交易所为代表。第二个是线上的场外市场，主要是上海黄金交易所询价业务。那么这里边包含着各个商业银行、各个金融机构在这里边进行交易，是机构间的交易。那么第3个市场是线下场外市场。那么线下场外市场主要是商业银行和其他的金融机构的柜台业务。那么在过去的几年当中，商业银行的柜台业务的发展速度也非常快。因此，中国目前的黄金市场的格局，在全球的范围内，应当是体现出场内和场外协同发展最典型、形态发育最好的一个市场。经过17年的发展，中国的黄金市场从最初的1年几百公斤这样的一个交易量，到今年到现在，我们每年的交易量大概应当在10万吨或者更多的水平。那么交易金额从过去的几百亿，大概要超越到上百万亿的水平。这是在和中国的经济的发展的体量相匹配的一个交易市场。那么黄金交易所的每年的交易量能够达到20万亿，超过20万亿，去年18年是21万亿。那么黄金的交易量能够由过去的几百公斤到现在的黄金交易所 SGE 单独的提供的接近7万吨。这个发展说明了走场内场外协同发展的道路，能够挖掘出一个经济体各个方面对于黄金交易的需求。所以中国的黄金市场的发展提供了一个场内场外协同发展的一个典型的案例。下边我讲一讲为什么场内场外协同发展能够在中国取得成功。我相信这个成功的案例同时也适用于我们的东南亚各国，适用于世界的其他的国家。首先，我想场内场外协同发展之所以能够取得很大的成功，是场内有流动性强、价格透明的优势，而场外能够提供各种非标准的各种投资和交易需求的多样化产品。这样的时候呢，能够满足各种各样的有高频度交易的，或者说是以投资为主要需求的交易的，还有各种各样的定制化的交易。那么场内和场外结合，能够保证 各种各样的需求在这个市场下都能够得到满足。我想这是第一个方面。第二个方面的优势是，场内和场外结合，能够发挥市场集中化的优势和机构全国分布的这样的一个优势。比如说，在中国，所有的商业银行都提供各种各样黄金的柜台的交易一种产品。那么它的分支机构分布在全国的每一个角落，有城市还有乡村，都可以看到它的分支机构。这样的时候，有一些居民，包括有一些机构，他们在家门口都可以找到商业银行，就了解到商业银行提供的各种这个产品，就会能够实现各自的交易。而另一个方面，当大量的交易要汇聚到一起的时候，我们的场内提供了一个最高效、交易成本最低廉，而且交割非常安全、清算也非常安全和高效这样的一种机制安排。这是第二个原因，第二个优势。第三个优势，我想也非常关键，就是风险控制优势。商业银行它分布的网络分布到千家万户、各个城市和乡村，那么它的交易量，每一个交易量是小的，那么这时候呢，是小额的交易是分散化的风险，而场内的交易是大量的，比如说黄金交易所每年的交易量达到20万亿，在这个时候，这是市场的核心。而在场内交易，我们有集中清算、集中交割，同时的时候，现在我们 SGE 正在建设中央对手方 QCCP 的这样的一个清算机制，这一切安排都保证了在中国黄金市场的核心部位，或者说舞台的中央，是一个严密监管、风控是科学合理这样的一个保障。那么就是大额的交易，集中的大量的交易是在一个严密的风控之下。这样的话，就保证了分散的交易、分散化的风险，而集中的交易、集中的管控，这样就能够避免过度的风险管理导致了交易成本的上升。我想这三个方面相得益彰，保证了中国的黄金市场在过去的17年走过来，走出了一条成功的道路。正因为如此，当我们今天推出上海金的时候，中国的这个黄金价格有足够强大一个市场的支撑，所以我相信它也会发展的会很好，会被世界各方所接受。女士们、先生们，中国金融市场新一轮改革开放的大背景下，中国黄金市场将继续沿着场内场外协同发展的方向继续发展。我相信一定能够为全球黄金市场注入更大、更具动能的活力。我就讲到这儿，谢谢大家。
Thank you very much, Mr. Wang. That was fascinating, showing how such a very large country such as China, with millions of diversified clients across many, many hundreds of miles, can still integrate with, as you say, the very highly controlled risk management within Shanghai itself. We will take questions at the end, ladies and gentlemen, but do feel free to use the Slido technology if there's something that you want to send through as you're listening to the speakers. But to keep things fluid, we'll go straight through all the presentations and then we'll open to our conversation on the panel and to the floor. So on that basis, I'd like to introduce Mr. Sachin Patel. Sachin is a Senior Director for Chicago Mercantile Exchange in Singapore. The floor is yours.
Hi, good afternoon, everyone. I would like to start by extending a thanks to the SBMA, in particular Chairman Mr. Martin Huxley and CEO Mr. Albert Cheng. It's a real privilege to be up here for my second year in a row, and I think what you've managed to do in just 3 short years of now having this Asia-Pacific Precious Metals Conference as a cannot-miss event in the bullion calendar is truly commendable, so thank you both. To Rhona and the other esteemed panelists, good afternoon, and I'm looking forward to a healthy discussion on our role as exchanges and the connectivity with the OTC markets. And to everyone in audience here today, I'm very conscious that we are the session leading up to the CME lunch in about 45 minutes, so thank you in advance for your attention, and look forward to giving you our ideas as CME Group and our interaction between the internationally listed futures and local OTC markets. That is my exceptionally long-winded way of saying I'm going to spend a few slides talking about the EFP, and then a few slides highlighting the importance of the Asia-Pacific region for CME Group in the precious metals market. So, the focus of these few slides will be to highlight how cross-market liquidity between the futures and the physical markets benefits all market participants, and that mechanism is known as the EFP, the Exchange of Futures for Physical, and which thus far, for several years now, has served as the bridge between CME, or COMEX, and the London OTC markets. And we will spend a little bit of time discussing how that can potentially be extended into the other OTC marketplaces. So very briefly, who are we, CME Group? The world's leading and most diverse derivatives exchange. From a metal standpoint, of course, it is 2 exchanges in particular that are of interest and probably better known for the audience. That is, of course, the COMEX, the Commodity Exchange, and the NYMEX, the New York Mercantile Exchange, which are the home to our 4 benchmark precious metals futures and options contracts. We have access in over 150 countries, trading through 11 global hubs, and have partnerships and relationships with 12 other partner exchanges globally. So let's take a moment just to have a look at what the current makeup of the global gold trading volumes are. And I've picked 3 major landscapes here. One, of course, is our own, the average volumes going through on CME. The second is the London and Zurich OTC market, and since November we have managed to start getting data through on the volumes going through in the OTC market. And then, of course, last and certainly not least, the volumes going through on the Shanghai Gold Exchange. In just a few short years, we've seen incredible growth from physical trading within the Asia-Pacific region. So 3 major hubs to look at. Of course, you can see at the beginning of this year, January and February average monthly volumes, CME and the London plus Zurich OTC markets are very, very similar in terms of the turnover that goes through in the 2 marketplaces, with SGE being a smaller but increasingly growing importance in terms of the component of the global marketplace. So the EFP, this has been the traditional way that COMEX and the London and Zurich OTC markets have had their interaction. So the CME and London and Zurich OTC markets, deep liquidity is linked by the EFP. The EFP is a readily tradable instrument, if we can describe it like that, something that would be quoted in a broker market or directly between counterparties. And this is a basis price between our market on COMEX, the futures market, and the spot market, which is traded in London. So in practice, what exactly are we talking about? Why is there this need for this linkage between COMEX futures and the OTC market? For several years now, gold dealers have used CME gold futures to hedge OTC positions. So what does that mean? there is a huge OTC market still traded, and we believe very much that the OTC market and the listed market live side by side. They are different liquidity pools that serve different trading needs, whether it be for investment or for hedging. But the fact is that for several years now, the OTC market has gravitated towards using COMEX futures as the first point of hedging price risk. So what does this mean? It would typically leave dealers with a basis that needs to be managed. For example, if the existing position were to be long London spot gold, we would hedge by selling some COMEX futures, giving this exact position in the middle box here, short gold futures, long London spot gold. So we are gold price neutral, but we are still exposed to a basis between the two markets of COMEX and OTC London. So the EFP is a very straightforward instrument which allows you to essentially neutralize that basis risk by entering into a futures versus spot transaction, which would neutralize that basis that had arisen from the original hedging activity. So this is the general concept of the EFP and something which has been traded for several decades now. Now, how can we connect this idea of the EFP from its existing form of CME versus the London OTC market to potentially something which could have more of a local flavor in Asia as the local market here becomes a bigger presence in the overall gold trading landscape? So what we've done here in this chart, we have tried to graph out exactly what this EFP price looks like. Not exactly in exact science, but what I hope is obvious here, if you take the top half of the chart, we've got the COMEX gold futures price taken at the time of the London gold PM fix minus the LBMA PM fix. So we have minimized we have equalized the time, so we get a like-for-like comparison. And what you can see is that overpriced, now remember the COMEX gold contract is a physically delivered contract. Why is that important? We should expect over time, as a contract on COMEX approaches expiry, any physically based contract you would expect to converge to the actual physical spot price. So over time, as a contract reaches expiry, we would naturally expect the EFP to gravitate towards zero. The EFP in that meantime is a function of supply and demand and time to that expiry. Now what you can see is that from that orange line, the COMEX market and the London OTC market have what I would describe as a fairly tight price differential now. You can see that there is this convergence over each 2 months towards zero and then a spike upwards for when the new contract rolls. Now, why is this important to highlight? It's important to cross-reference this for a potential EFP comparison with the local market here in Asia. So if we do the same exercise and look at the gold futures price on COMEX versus the SGE's fix, you can see that that tends to exhibit much, much more volatility. What does this suggest? That the wide price and spreads between gold futures and, for example, SGE spot prices indicates a potential opportunity for an EFP market to develop further down the line. Now, as I mentioned, I just want to take a bit of time to highlight exactly the importance of this region for the CME gold market. So we traded 8 billion ounces last year versus 4 billion ounces in 2012. That equates to about 32 million ounces a day or $40 billion of notional, however you want to slice it. Now, in that time frame where global volumes have doubled, Asia Pacific has been the standout performer. Asia Pacific volumes from our Asia Pacific clients have trebled in that time. The other important point to highlight is the liquidity we see in this time zone is almost comparable to what you see in New York hours. Up to 40% of our volumes now actually go through between 8 a.m. to 8 p.m. Singapore time or China time. So 40% of volumes are going through Asia Pacific hours on the COMEX gold futures. Asia's importance as a physical market, not just the financial futures on COMEX, but as a physical market. Here is a diagram with some example trade flows, and you can see the importance that the China and Hong Kong are in terms of their importing flows from the traditional gold-producing regions in the Americas, Africa, and Oceania, and the traditional gold refining regions in the UK and Switzerland, with these flows heading into China and Hong Kong. So what does that potentially lead us to going further down the line? A potential linkage between the benchmark gold futures price, where is the first point of call for price risk to be hedged, and the local Asia OTC spot market. The last point that I will highlight, and something that I believe we will discuss further in the panel session, is some initiatives that CME Group are taking to further service the OTC market, and that would be through two particular products. One is cleared, unallocated local London gold and silver forwards, and also improving our capabilities in the option space, where traditionally in the OTC space, we now have a listed product to help manage short-dated OTC risk. So I look forward to elaborating on that in the minutes to come, and thank you very much for listening to the opening words. Thank you.
Thank you very much, Sachin. It'll be interesting to see how long it takes before Asia accounts for 50% of the turnover in those hours. Moving on to London Metal Exchange, London, I'd like to introduce Mr. David Mears. David is the Vice President for Precious Metals for LME London.
Thank you, Rhona. 大家好，不好意思，我的中文不是特别好，所以我打算从英语。Great. So there's three key points I want to make today about LME Precious, which is the LME's gold and silver offering. Firstly, I want to say that by accessing LME Precious, you are effectively accessing wholesale interbank liquidity and rates. So that's point number one. The second point really is around transparency, and I guess we see it all around us in the world now, this move towards transparency, whether that be VAR technology in football, whether that be Nike's new clear trainers. But in the precious market, we really see transparency coming in terms of provenance and in terms of pricing. And LME Precious itself is very well positioned to support that transition that the market is making towards more transparency in pricing. And the third point I'd like to make relevant for this market is that the global bullion market is becoming increasingly interconnected. And for me, that's to the benefit of the end user, to the consumer, to the producer. And to that end, LME Precious provides a liquid on-screen pool of local London liquidity that participants can use to trade against other exchanges and to manage regional basis risk. Okay? Yeah, a bit of background. So the LME launched gold and silver futures contracts in July 2017. These are settling into local London unallocated bullion. It's a key point, really. Where it gets interesting, we look at the date structure. So these are basically combining daily contracts with monthly futures contracts, and it's all one date line. And what we do is, using our technology in the matching engine, we actually combine those pools of liquidity as well. So we have a number of banks who are streaming spot prices. They're also streaming carries, which are effectively calendar spreads from spot out to each of these monthly futures contracts. So to give an example, if you had a producer who wanted to sell some spot gold, he might place that resting order in the book. That would combine with spread obligations from the banks, and that would create tradable outright monthly contracts, which say a hedge fund wants to go long gold, he can then match. So what we're really trying to do is pool the liquidity in local London. So yeah, I'll elaborate a little bit more on some of the benefits. LME Precious is quite unique in that it was launched in conjunction with the market. So a group of banks came to us and said, look, we see significant capital savings and netting benefits from trading on exchange and centrally clearing. And so we worked with them to design the contracts. As I say, spot right the way out to 5 years. I think what's really interesting in terms of transparency is that we're bringing back the forward curve. So actually, the LME itself used to administer the GOFO curve, but with these LME precious contracts, we have an actual tradable futures curve. So we're able to publish a curve which is based not on submissions, but it's based on traded activity on screen. So a little bit more on the regulatory drivers. I won't delve too deep, but there are significant benefits that can be materialized by central clearing compared to OTC trading, particularly for the big banks. So this really materializes itself in reduction in RWA and reduction in funding costs related to leverage ratio. Now, of course, there are a lot of assumptions, different accounting treatments. Won't go into all the detail, but I can tell you that the banks that are using the platform have done the back testing and they've seen significant capital savings from holding particularly longer dated positions on a cleared platform versus OTC. Equally, bilateral margining. So this is particularly important to the overall benefit of clearing on any exchange, is that if you're posting margin against multiple counterparts, under the new regulation in Europe, which tranches down, catching more and more players in the market, you'll have to post segregated margin with each of your participants. Whereas on exchange, that will all be net margined. So again, there are these regulatory drivers which are encouraging certain business to go onto exchange, and I'll come on to how it complements OTC a little later. Just touching briefly on liquidity, just pulled out a couple of screenshots. You can see we're around 20 cents wide, spot gold. Interestingly, I've pulled out some of the carry pricing here. So we've got 3 guys streaming all of the carries, as I said, and the aggregate of that ends up with quite tight pricing. So you can see, I think I pulled out 3-month gold at just 2 basis points wide, 6-month at 3 basis points wide. And really, as a client accessing the platform, you're really getting access to that wholesale interbank liquidity and the benefits of all of that, netting and capital efficiency I've described. Quick list of our members. As I said, we launched in conjunction with a number of banks, Goldman Sachs, Morgan Stanley, ICBC, Natixis, SocGen, the World Gold Council, and OSTC. And since then, we've had a number of additional members, and I guess one of the key benefits is that if you're trading on exchange, you don't have to have bilateral relationships with the counterparts that you trade with. So I can trade with you OTC, effectively on a Bloomberg chat, but then we just book it onto exchange. We don't need to have that relationship. I think overall there's that benefit that exchanges provide and clearinghouses provide of centralizing that KYC and risk management function to reduce systemic risk in the system. Volume and open interest. So 2018 was our first full year, and we traded over 2,200 tons. I think we're quite proud to say we were, I think, the 5th largest gold exchange in our first full year of trading, which really validates that need from the market. And equally, an open interest, you can see a decent build-up in the sort of 1-year area, 1 to 2 year area. And I think that really validates what I was saying about the capital efficiency of trading on exchange and centrally clearing. A little point on transparency. Here I've pulled out effectively the rates that are implied by our settlement curve. As I said, there is no longer a GOFO curve. This is in some ways better because it's based on actual tradable activity. You can see the 1, 2, 3, 6, and 12-month rates there. Not trying to describe the market here, but just telling you that this is the kind of extra transparency that the market can get from a platform like this. I think you can see a little bit of pop over year end, which is quite typical as people try and close out their positions. I'll briefly mention a couple of key developments before summing up. You may have seen we had regulatory non-objection for a speed bump on our market, which is quite exciting. If anyone wants to talk about it in more detail afterwards, please come and find me. But effectively what we're trying to do is provide some protection for those people placing resting orders on the order book. And we've had significant feedback that liquidity providers will be able to provide tighter pricing on screen as a result. So that's an exciting development for us. We also have a new market participant program and options and PGM futures on the horizon. And just summing up, something to mention, particularly for this region, that we actually have our own market data platform, LME Live, which is free. It's free for precious data. So I'd encourage you all to To get it, you can get it on your mobile browser, offer you free market depth on spot, free forward curve. Very interesting. And I guess just to sum up in terms of the complement to the OTC, the way that I see it is that the way that regulation is driving us is that the banks will increasingly use exchanges and clearinghouses for the larger risk management and reap the rewards of the capital efficiency and netting benefit such that they can provide better OTC pricing for non-standardized sizes, purities, locations, etc. Thanks.
Thank you very much, David. I look forward to seeing the listing of the platinum and palladium contracts in particular and to follow the machinations of the palladium forward curve, which is always one of the more interesting elements of the market. And finally, we come to Mr. Dennis Chung, who is Managing Director and Head of Market Developments for Commodities for the Hong Kong Exchange.
I don't have PPT, but save everyone's time. We have slightly different view on the precious metal. From our perspective, precious metal, we divided to physical market, trading, real gold flow storage, and some new flow coming from the markets. So as David just said, overall, the 24 trading hours, together with LME and Hong Kong, the European trading hours and the Hong Kong trading hours, we cover how many, 16 or 20-some trading hours already. But if we keep targeting the existing precious metal markets, then we still target the same group of people. Either it deals with physical gold or it's from the central bank buying gold to store value. Hong Kong Exchange, we rather a lagger on the physical commodity, especially precious metal industry. So we rather create something new for the market. And we don't create the market demand, but we try to facilitate the new market demands. So specifically, together with LME, we try to connect Hong Kong and London. Either it's physical, it's on exchange traded, or it's OTC trading from London hours, from Hong Kong hours. Essentially, we try to provide a platform or a service that allow people trade in London but deliver in Hong Kong, or trade in Hong Kong but deliver in London. And from Mr. Wang's PPT just now, increasing number of physical gold demand coming from China mainland, but still is priced in CNY. Shanghai Gold Exchange enables the International Trading Board, which is very good and very helpful for international players. But before we see a completely open up China in terms of currency policy or the physical gold flow policy, still is two markets. It's CNY markets and dollar markets. It's kilobar markets and ounces markets. Globally, we have LBMA, the existing standard for the physical gold markets. But if we take a look at the energy markets, we have WTI crude oil, we have the Brent oil. Two different group of people trading different benchmarks on the similar underlying. And we do need two different standards. We do need two benchmark prices, especially in the precious metal perspective, a Asian standard or a Asian priced or denominated benchmark price, so that Asian trading hours people, they can trade a kilobar, either it's in dollars or in Hong Kong dollars or in CNY, CNH, together with the dollar ounces. Because I assume 90% of the Chinese people, they have very little knowledge about the ratio of ounces and kilos. They buy their jewelries in kilos and grams. So from Hong Kong Exchange perspective, number one, we try to connect infrastructure-wise together with Hong Kong and LME to facilitate two marketplace dollars ounces, dollars kilos, or CNY, CNH in kilos altogether. We try to enable deliver in the opposite markets, trade in Hong Kong but deliver in London, vice versa. And second of all, we see there is a huge gap between the conventional physical precious market to the new cryptocurrency markets. Now, everyone talking about the new currency, the cryptocurrency, we don't need warehouses to store value. We use mathematical models to store our value. But still, there's a huge gap. So we hope to sit in the middle to facilitate the conventional physical gold market with the new cryptocurrency markets. So it could be digitized the gold. I see Digix as a sponsor for today's meeting. So either it's digitized the gold or it's some new inventive format of a gold vehicle to facilitate the value storage. And third of all, around the world, the physical corporate or the physical mines, they keep producing more gold to the market. But it's still the same group of people, they're buying jewelry. Perhaps someday we see a gap or an opposite direction from the increase of physical gold supply versus the physical gold demand. And perhaps in that day, most of the central banks will buy up all the surplus physical gold as they're printing more money. So from this angle, the Chinese central bank, they keep buying gold, importing gold from the market. And then that becomes a FIC story. So it becomes a Chinese yuan story. Then from Hong Kong's perspective, we try to facilitate the demand from the FIC industry. It either use gold as a hedging tool to the CNY currency, or it do something else to connect the currency ratio. So to echo with David, with LME, with CME and SGE, Hong Kong, it's in the middle of China, Asian trading hours, and the conventional precious metal industry. We hope to connect from the physical network perspective. We hope to connect the conventional precious world to the new cryptocurrency world. We hope to use gold as a perfect vehicle to connect the commodity side with the FIC side. So maybe I leave more time to the Q&A session, and forgive me for not having a PPT for today. Thank you.
That was an excellent and very clear exposition. Thank you. PowerPoint or no PowerPoint, you didn't need one. Ladies and gentlemen, that concludes the formal presentations from our panelists, which raises a number of interesting points. Sachin was talking about expanding on the relationship between the CME in particular and OTC. So let's start with you, Sachin. How does the CME envisage the future relationship between local and regional precious metals markets and the established listed offerings?
Sure. So, as I mentioned, we've had a very long history already of our interaction with the local London market, a well-established market practice of connecting futures and OTC. And again, just to highlight the point, the CME futures have been the first stop for hedging for a number of years now. Now, I personally believe that with the advent of the Shanghai Gold Exchange and the amazing work that has been done there in already becoming such a large part of the OTC local physical market, connecting the two markets in the same way is perhaps the end goal for us both. For example, over the last few years, I personally feel that from my own conversations with our very wide variety of clients, the number of new entrants that want to have access to change the onshore, to trade the onshore markets in China is growing, and it's growing exponentially. And so this is the whole point really between that EFP mechanism. We want to connect the two different sources or the different pools of liquidity. Now, as we repeat very often at CME, liquidity begets liquidity. This is very often a game of chicken and egg. So how does this really happen in practice? It is by the onshore players perhaps slowly getting access to the international futures market, and the international players slowly getting access to trade the Shanghai market. With these two individual components, I believe that then an actual traded EFP mechanism is something that will naturally follow. You will start seeing quotes and requests for prices to neutralize any basis risk that occurs between trading the onshore and the international market. So where we go from our current state, I believe that certainly, in the coming years, this is going to be an increasingly important thing for us to focus on with the combined clients that we have accessing both COMEX and the Shanghai markets.
That's fascinating. One of the things that you mentioned in your formal presentation, you were talking about the migration away from the LBMA price in favor of COMEX being the kickoff point. Certainly when I was involved in setting up some of the work for the administration of what became the LBMA silver price, I heard many times market participants talking about COMEX as the first port of call and then using the EFP to come through to the London benchmark, which is certainly not something that was happening when I started in the market many, many years ago.
But to that point, again, as I highlighted in the presentation, the OTC market and the exchange cleared market, they need to live side by side. There's a very important function that is provided by the OTC market, which can't necessarily be easily replicated in the futures market. The OTC market will provide a certain degree on flexibility, particularly when it comes to hedging of output. The LBMA fixed price, benchmark price rather, still remains a basis for several physical contracts. And so that's why I always do like to highlight that the two markets need to work side by side. In practice, how things have changed with regards to hedging is certainly different now compared to perhaps 20 years ago, where the interbank bullion market was perhaps more active between those market makers. And as we've seen the advent of increased electronification of the market and participants be able to access COMEX directly, again, we've naturally seen a bit of migration. That first point of call for hedges moved to the electronic platform. But for sure, the two different liquidity pools will always have an interaction together, and it's certainly not a case of we need to grab your market share and take it indefinitely. It's a game of working together. I firmly believe that.
Talking to your concept of the CME and the Shanghai Gold Exchange working much more closely together, which obviously seems to be a natural evolution. Mr. Wang, could I ask you, what are the ways currently in which an overseas participant can utilize the services of the SGE, and are there any changes that you foresee could come through in the future which, for example, would help the CME and the SGE work together, or indeed just open up international participation in the Shanghai Gold Exchange?
感谢。是这样子，我们现在上海黄金交易所呢有这样的几个方面的发展的这个规划。首先的时候呢，在进一步的发展我们的上海 SGE 的 International Board， 就是国际中心。那么现在我们国际中心14年成立，现在是4年多一点的时间。4年多应当说是奠定了一个进一步发展的基础。那么下一步，我们将会进一步的优化对国际会员的一些服务，包括从在交割、 我们在仓储方面的服务，我们会设更多的一些海外的一些交割库等等，为海外的会员的服务，为它的清算、交割方面的就会更加便利，这是一个方面。同时的时候呢，我们在我们的交易平台上会提供更多的产品，让我们的这个会员呢，在各种各样的一种交易需求都能够找到对应的一些产品，这是一个方面。那么另外一个方面的时候呢，我们也推出让上海金，推广到，比如说我们和 CME 的合作，我们下一步的时间呢和 LME 的一些合作等等，我们把中国的市场和美国的市场和英国的市场、伦敦的市场等等紧密的连接起来。我们在整个过去的17年的发展当中，我们越来越坚定这样一个信念：黄金市场是一个全球的国际的一体化市场。因此，我们在发展中国的黄金市场的同时，也希望能够让中国的市场更好的对接国际的市场。只有通过这种更加好的连接，让中国的这个投资者能够很便利的走到国外去，而国外的投资者能够很便利的走到中国的市场来，中国的黄金市场才能发展好，世界的黄金市场才能发展好。
Understood. Thank you.
谢谢。
Tying in with that, a question for Dennis, and I think David probably may want to elaborate on this a little bit as well. The Hong Kong Exchange 2019-2021 strategic plan talks of providing broader, more effective access to Asia-Pacific underlying assets, and I quote, the intention to create a one-stop shop for China and Asian exposures. So particularly bearing in mind what Sachin and Mr. Wang are saying about the globalization between CME and Shanghai and all points in between. Could you elaborate a little on that plan and that policy and the implications?
Yeah, sure. So Hong Kong is traditionally a financial trading hub. People come to Hong Kong, they trade Hong Kong stocks, they trade Hang Seng Index, they trade perhaps equity derivative products. So when people find trading opportunities of precious metal, they trade in CME for the liquidity, or they want to trade a Chinese price, they go to SGE for a Chinese yuan price. But from Hong Kong perspective, we hope to provide similar products with slightly differentiated features so that we can facilitate these multi-asset class or multi-products traders. They can find their portfolio in Hong Kong as a one-stop service station. So we enable dual currency precious metal contracts listed in Hong Kong. We hope to work with LME, we hope to work with SGE. Perhaps we can find opportunity to work with CME on the premium. It's quite open. And also we take advantage of Hong Kong's FIC, the currency ratio, the currency futures advantage to accommodate the FIC traders. And also Hong Kong currently have the sandbox for the fintech industry, and we also hope to explore new cooperation opportunities with the fintech industry. And obviously precious metal could be a best vehicle to link with the fintech from the digital world to the physical asset-backed industry.
It's certainly very interesting seeing the vast number of people who are here representing the digital side of the industry. It's been in discussion, obviously, for some time, but it now actually seems to be gaining some traction. David, is there anything you wanted to add on that issue?
I would just reiterate my earlier point that I think the global bullion market is becoming increasingly interconnected, and whether that be through exchange relationships, cooperation in clearing, or even just actually the arbitrage that naturally happens between exchanges. I think it's a good thing, right? If you're a consumer in X region and you can enter your interest onto one exchange and naturally that can be matched by a producer who's putting their interest on another exchange, I think that's only to the benefit of end users, in my view.
Indeed. And tying in with that, we have a couple of questions from the floor. One, which is particularly relevant to what you've just been saying, is addressed to Sachin and asking whether the CME has thought of making the gold forwards market more transparent by bringing two-way quotes onto the exchange platform.
Sure, that's a great question. So it ties in with the last slide that I had in my presentation regarding our cleared gold forwards product. Of course, we always let the market decide exactly what it needs. We can build the shell of the product, but in terms of how it's practically quoted and traded, it's down to all the participants in this room and beyond to really give guidance for that. Our product, quite honestly, in its current form, is not envisaged to be populating a two-way screen for forwards out to 10 years. One of the bullet points that I had on that slide mentioned that this is a clearing vehicle only. So what do we mean by that? In essence, for the huge gold forwards market, which does exist, interbank market, bank versus client, etc., our intention here is not really to change the status quo in terms of how you would execute a gold forward. We do not really envisage all of a sudden having that liquid populated screen. The execution of these gold forwards will still reside essentially as a bilateral transaction. You execute it directly with your counterparty, perhaps through the broker, and then you clear it via Clearport to exchange. That's what we mean when we just say this is a clearing vehicle only. We're using this product, or want to offer this product, again, to capitalize on the amount of futures trading and hedging that already comes onto our platform, to have a forward product which would then offer capital and credit efficiencies being you are now part of the central counterparty clearing model, the capital efficiencies being potential offsets between a gold forward position and a futures position. That is really what we want to offer to our clients, but without really wanting to disrupt the way that you already trade the gold forward. So a long-winded way of me saying I wouldn't expect CME to all of a sudden have two-way quotes on cleared gold forwards, but we want this to be offered really as a capital efficiency product to our clients.
That makes sense. There are two questions which essentially are complementary to one another that have come through. And again, we're talking essentially, initially at any rate, to the CME and to the Shanghai Gold Exchange. The CME question asks whether there are any thoughts on having more vaulting centers for gold delivery here in Asia. And the question to the Shanghai Gold Exchange is whether the exchange would consider adding a delivery point outside mainland China. So, Mr. Wang, would you like to?
Sure. Well, I'll be quick with this one. We are constantly engaging the market and, of course, our local market with regards to delivery on all of our contracts. That could be gold, that could be copper, it could be anything. And it's decisions that we will assess based on that feedback. Currently, we do not have anything concrete to really announce in terms of having any additional vaulting facilities for COMEX contracts in Asia.
刚才的时间呢，我谈到黄金交易所国际版经过4年的发展，应当说奠定了一定的基础。到目前为止，我们有76家的国际会员，国际会员分布在世界的各地、各大洲、各主要经济体都有我们的国际版的会员。那现在看国际会员就地交割这种需求将会越来越大。另一个方面的时间呢，我想在中国的市场进一步加大、影响力进一步增强的大的背景下边，中国的这个 SGE 的国际版的国际会员，在最近的几年还会继续增多，用不了多久就会突破到100家。所以海外的交割库的发展应当是比较紧迫了。 当然了，我们现在正在积极的谋划。首先的时间呢，能尽快的满足最需求的地方。这也是我们今天能够走到新加坡，前不久的时间呢，去伦敦参加各种各样的会议，了解我们同行的一些需求，了解国际市场动态。我们的初衷就是要在这个方面的时间呢，做一些事情。谢谢。
Very interesting. We look forward to developments with interest. Again, for a combination really of Dennis and David, how do you see how the purchase of the London Metal Exchange has extended the Hong Kong Exchange global reach? And tied in with that also, David more particularly, what is your user base in Asia? And how do they tie in with the international trading through you?
For the existing Hong Kong Exchange customer base, they primarily trade equity derivatives or equities. Our members has an edge to facilitate or to provide service to the financial customers. However, LME's member structure, LME ecosystem is one of the best in the world to provide services to the physical customers. But so far, we see discrepancy of combining these two different customer base. So the Asian investors, they still prefer trade in Asia. Maybe they trade sometimes in London or in Chicago, but most of the times they stay in the trading hours. They deal with their members, they deal with their brokers, and vice versa for the European customers. So after buying out LME, we hope to find a way to combine from, not only from the product level, but also from the members level, so that the Asian members, they don't feel uncomfortable going to London to compete with the European members. And the European members, they can see additional business opportunities coming from Asian trading hours. So from product level, membership level, we try to work with LME together to get a better way or efficient way to essentially combine the two ecosystems and the two different group of customers.
David, like the final word?
Yeah, I'll just add to that. Yeah, we already have a number of active participants in the Asian time zone, and I guess to answer your question, that is both electronically and also inter-office, which is effectively the cleared market. And electronically, really, I guess the focus is utilising that pool of local London liquidity, and London remains an important market, right? I mean, a lot of producers still produce and get credited unallocated local London credits, and therefore risk managed through that location. And then also from the inter-office market, the key benefit that guys in Asia and actually globally are utilising is the fact that you can trade bilaterally without the credit line. So you don't need that that bilateral credit line between your counterparts. That's that sort of centralised KYC and risk management that I described earlier, which I think the exchange and clearinghouse brings.
And to some extent, it obviates the problems with an SFR as well, doesn't it?
Agreed.
Ladies and gentlemen, we are up to time. In fact, we are bang on time. I found that absolutely fascinating. I hope you did too. And I'd like to extend very warm thanks to our panellists for their expertise and their insight this morning. And we now release you for lunch.
Thank you very much to our panelists and moderator. Let's have a photo taken standing up, please.